Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine government officials negotiating tariffs in Washington, D.C. report positive results. Philippine manufacturing activity bounces back while U.S. jobs growth remains robust in April. Philippine market reaction from Regina Capital Market Development Corporation's Luis Limlingan. And SM Prime Holdings eyes the premium residential market to be a significant contributor to top-line growth. We speak with Jose Juan Hugo, Executive Vice President, Premium Residential Segment of SM Prime Group. Filipino and U.S. officials and tariffs, quote-unquote, went very well. That is how Frederick Go described the Philippine delegation's recent meeting with U.S. Trade Representative Jamison Greer. The Special Assistant to the President for Investment and Economic Affairs said both countries agreed to take concrete steps for stronger bilateral trade. The talks centered on the interests of local industries and concerns regarding levies to Philippine exports. The talks came in the wake of the 17% reciprocal tariff imposed by U.S. President Donald Trump on Philippine goods, one of the lowest rates in Asia. Go did not say whether the tariffs would be lowered. Also part of the Philippine delegation were Trade Secretary Cristina Roque and Philippine Ambassador to the U.S. Jose Manuel Romualdez. The U.S. incurred a trade deficit with the Philippines amounting to nearly $5 billion in 2024, up 21.8% from the previous year. The U.S. jobs market showed remarkable resilience in the face of Trump's tariffs. According to its Labor Department, the U.S. added 177,000 jobs, slightly lower than the 185,000 in March. Still, the figure was well above the gain of 133,000 jobs that economists anticipated. U.S. unemployment rate stood at 4.2%. And some analysts say the numbers reflected staffing decisions made in February and March before Trump's Liberation Day tariff announcements on April 2. As such, fast-changing trade policies could soon take away the momentum from the jobs market. The U.S. is headed for a recession. That is what two economists from Security Bank anticipate in a report issued Friday. Research head and chief economist Angelo Taninco and junior economist Chino Hilvino wrote that chances of a recession has increased due to the sluggish PMI and consumer confidence data. 2 consecutive quarters of negative GDP growth indicate a recession. The U.S. economy already contracted in the first quarter of 2025 by a third of 1%. Another contraction would lead to the first U.S. recession since the early months of the COVID-19 pandemic in 2020. In an interview with NBC News Friday, Trump downplayed the impact of a short-term recession, declaring that the U.S. is in a transition period. The Federal Reserve will announce its next decision on Wednesday, that's Thursday, Manila time. Economists widely expect that the board will keep rates steady amid relentless pressure from Trump. Fed Chair Jerome Powell has been in Trump's crosshairs for refusing to lower rates amid a potential economic slowdown due to the tariffs. Fed officials remain patient since the U.S. economy has stayed on solid footing, reinforced by the better-than-expected jobs report. Powell has once warned that the tariffs could dent growth and stoke inflation. Analysts believe the Fed would only ease rates if inflation would not spiral out of control. The Philippine manufacturing sector bounced back in April after a contraction in the previous month as new orders and output increased. That's according to S&P Global. The country's Purchasing Managers Index rose to 53 from 49.4 in March, signaling improved business conditions driven by new clients' acquisitions and the upcoming elections. While production and purchasing activity picked up, employment levels stayed flat for the second straight month. Inflationary pressures remain modest, with firms managing workloads and keeping backlogs low. However, overall business confidence dropped as manufacturers expect growth to slow once the election ends. This week, all eyes are on key economic data. We've got April inflation data to be released on May 6th. Is it going to be above, below, or within the Bangko Central's 1.3 to 2.1% forecast, or is it going to be a steady 1.8%, unchanged from March, as what Business World poll of analysts expect? As for employment, the data comes out Wednesday, May 7th. Will the jobless rate continue to fall from January and February? And as for gross domestic product, figures will be released on Thursday, May 8th. Is it going to be improvement or a setback from the 5.3% in the previous quarter? So will the latest figures influence the mood ahead of the midterm elections? We have to stay tuned in the coming days for economy-related stories. Check out Business World and the Philippine Star online. Let's take a quick check on the Philippine markets. The Philippine Stock Exchange opens Monday higher by a tenth of a percent at 6,418. PSEI gain on Friday by nearly 0.9%. And the Philippine peso opens Monday flat at 55.57 to the dollar. The peso closed Friday at its strongest level in over a year at 55.57 against the greenback. With us for more is Luis Dimbingan, the head of sales, Regina Capital Development Corporation. So good to see you again, Luis. Welcome back to the program.
Hi, Cathy. Thank you for having me and happy Monday.
Happy Monday. So what do you make of the negotiations? Didn't really get any certainty there on whether tariffs went to zero, but what do you make of it?
Well, as you reported, Frederick Go said that it went quite smoothly. Of course, I think at the very least we want the tariffs back to where they were. But I would like to think that both the U.S. and the Philippines are exploring ways to even bring it down to as close to zero as possible. I think that was what the U.S. intentionally wanted, and that's why they invoked these surprise tariffs last month. No?
Well, what do you make of the market reaction? Do you think the markets are reacting because of the decisions?
I think it's still a bit premature. Right now, I think it's not focused on what happened over the weekend in Washington with the negotiations between Jameson Greer and the Philippine delegation. No, but I think it more has to do with the U.S. Pausing and trying to negotiate with other countries, especially China, where I think they impose a huge tariff of over 100%, and of course, uh, China being the global manufacturing country of the whole world, no. And I think right now, at least on the short term, it's really the data that's been coming out. As you mentioned, the employment figures in the US were better than expected. Um, some are also anticipating better numbers, at least locally. It's a very economic data heavy week for the Philippines with both inflation and GDP out this week. So I think people are already anticipating the numbers that are going to be coming out later in the week.
Just going to get to that. What are the numbers going to look like, especially for inflation that will influence the Banco Central? And we also have the Fed deciding on rates by May 8th, Asia time.
Well, at least our house call is that the CPI could possibly be less than 2%. And the reason for this is we see that oil prices have continued to moderate given that many economists were forecasting that there could be a recession in the US. Second, we have also noted that the rice prices have also continued to weaken further. So we think that at least for April, we can see that the inflation is going to be benign, which gives the BSP some leeway to maneuver rates. I think also, lastly, what works in the favor of the BSP is that the peso has been appreciating, and I think it's already trading at close to 55.50. So at least this can make the case for the BSP to actually make another rate cut in the next meeting. But I think also it a lot depends on how the Fed is going to pivot when they release their decision and their outlook for the rest of the year.
Right, and there's that midterm elections 1 week from now here in the Philippines. It's going to be a truncated work week. So, which equities have benefited the most, you think, from the run up to the polls?
Well, the obvious beneficiaries they would like to say is going to be the consumer space because there's going to be a lot of spending when the candidates go around, and of course we like to point out the problem with the election is that, or if you're a candidate, you would want a convincing victory, whereas if it's a tight race, it's actually good for the economy because a lot of these candidates are going to be pumping up their spending just to get the attention of the potential voters.
All right, well, watch out for that then. Thank you so much, Luis Limlingan of Regina Capital Development Corporation. And you're watching Money Talks. Coming right up. How will the premium residential market contribute to the growth of SM Prime Holdings? We'll speak to Jose Juan Hugo in a few minutes. And U-Star Hotel opens this week as the Cebu-based resort marks its third year. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. SM Prime, the real estate arm of the C-led conglomerate SM Investments Corporation, sees the premium residential market in the Philippines as among the firm's significant contributors of growth. The firm has allocated 100 billion pesos in capital expenditures this year. SM Prime last Wednesday reported an 11% increase in first quarter profit, scaling 11.6 billion pesos. As for its stock, SM Prime continues to trade within a dominant bearish trend, says Ron Acoba of Trading Edge, as seen by a pattern of successive lower highs and lower lows. But Acoba notes in recent weeks, the stock appears to have found temporary support around the 22 peso level. Its interim pivot resistance is 26 pesos. With us now for more is the Executive Vice President, Premium Residential Segment of SM Prime Group, Jose Juan Hugo. Good to see you, Gijo. Welcome to the program.
Good morning, Cathy. It's good to be on your show.
So, have you got a name yet for the company, for the segment? If SMDC is mid-market, I believe you're in the high end.
Yes, we do have a name that will be disclosed soon, but what we're doing, it came out of the news some time back that we're consolidating all residential brands under one umbrella called SM Residences. SMDC is part of that. We have the Leisure Group as part of that too, and our group, the one we're starting off for the premium segment, will be another unit under SM Residences, and we'll disclose the brand and the name in proper time.
Right, but why now? I mean, what makes you say that now is the right time when there is a lot of uncertainty over Philippine GDP growth, growing north of 6%, could be below that, and by way of global policy uncertainties, OFW remittances slowing?
You're right. But if we look at how this premium segment has performed over the past decades, despite global and local turbulence, the headwinds it's faced, this particular segment has always been proven to be quite resilient, quite steadfast, fruitful, and prosperous. It's been growing. Despite all the challenges the industry as a whole has faced, this segment has performed quite well. And why now? Over the same period, several decades, this company, the SM Group, has quite convincingly dominated the segment it's in. Beginning, of course, at retail, and it's evolved. No, that retail segment has evolved into something very strong. Affordable housing through SMDC has also anchored itself as the leader in that segment. Offices have prospered. It's only this particular premium residential line for the primary use that we haven't quite entered in an impactful way just yet. And because it's proven to be a very steadfast market, we made the decision to enter it. Now we have the land bank, we have the resources, we have the experience. We're building the organization, and we have all the right ingredients in place to make sure that we succeed.
Metro Manila has an oversupply of condominiums, so would you be taking a stab at Metro Manila for your premium residential developments?
When we talk about the oversupply of condominiums, we have to put things in context. You know, my personal view in all my years in this industry, high-end segment, is that the bubble, the sensitivity has really been in the down market, the broad-based market. But this segment, the premium line, whether it's premium or luxury, ultra luxury, it's not a very big market, but it's very stable. It's quite lucrative, and I don't see the oversupply in that particular segment. And this is why we want to make a move on it now, while the time is right.
So where would you build first, and why? And what's going to be the key differentiators?
Well, the organization has been blessed with a proper land bank because of the foresight of our leaders in the past, the owners, the founders. It's built a footprint across the nation with sizable land banks, and it's now just a matter of choosing which parcels to choose for the right product. So yes, we do have parcels in Metro Manila, and we do plan to make our entry in Metro Manila, hopefully within a year. But we do have properties also that are ripe for unlocking in key cities like Cebu, for example. So if things go as planned, you'll be seeing a lot of activity from us, robust activity from the premium line in Metro Manila, in Luzon, and in Cebu.
Pretty interesting. It's really an affluent, discerning market that you're trying to reach. So which international market or markets are you targeting? Because Collier says the sweet spot for, say, the OFW market is in the 2.5 million to 7 million peso range per residential unit, but your luxury units are way above that.
Yeah, we have to put things in the proper categories. Now, when we talk about premium residential, the premium market, it's really a conglomeration of substratas. So after the affordable housing market, which SMDC quite owns, we plan to enter what we call the entry-level premium. That's where SMDC quite ends its product line. So maybe we start at 15 million and above, and then we plan to produce premium residentials, probably 25, 30 million, all the way to luxury, 50, 60 million, if the products are right and if the locations are right. Few and far in between, if there ever is a chance to do ultra luxury, if the market is ready for that, then we'll get into that as well.
Give us a bit of color here. How would you describe the prospects then for high-end market? Just going by occupancy rates and rental growth across the current premium properties we just seen there by SM Prime, such as Conrad Hotel, Samila Coast Beach, SM Aura, SMX Convention Center, Tagaytay Highlands, just to name a few.
I can't mention the exact metrics right now for those product lines, no, but overall the activity has been quite robust. Despite the turbulence we've faced globally and locally, we've seen that the Philippines in general has performed ahead of the curve. Our GDP last year was 470 billion. Our inflation rate was below 3%. Our GDP, depending on which institution you talk to, is projected to grow 5 and 8%. So all things are in place, and all arrows point upwards in the right direction for us to enter this segment. Now, market wise, if we do condominiums, then we open up ourselves to foreign investors, which is quite good, because as I mentioned, the Philippines has performed ahead of the curve, which means that this opens the door for investors overseas to choose our country to put their money in rather than put it somewhere else where it might earn lower yields. So it's a good time to enter a very stable and very progressive market.
Good to hear more silver linings out there here in the Philippine economy. Thank you so much, Gijo. Appreciate
Thank
the
you.
time and the
very
insights
much.
there. Jose Juan Hugo of SM Prime Group.
Thank you.
A New Star Resort and Casino opens a second hotel situated within its complex in Cebu City. The New Star Hotel Tower rises above the integrated casino and luxury mall complex along with the Fili Hotel. Designed by HKS Singapore, the hotel references the city's maritime history integrated with principles of feng shui. The 26-story tower has over 220 rooms with suites ranging between 77 and 225 square meters, the largest in the city. Sean Knights, the chief operating officer of New Star Resort and Casino, said they aim to deliver distinctive guest experience. These include premium accommodation, creative dining concepts, and world-class gaming, all with Cebuano flair. The Bases and Conversion Development Authority generated over 7.7 billion pesos in investments in the first quarter. This marks over 209% of an increase, or more than triple from last year's amount. Local investors contributed 5.8 billion pesos, while 1.9 billion came from foreign sources. Among the major players are Science Park of the Philippines Incorporated and a Filipino-South Korean consortium, investing 2.7 and 4.8 billion pesos respectively. Four local firms also signed deals to boost Camp John Hayes food and hospitality sector, including expansions of Lemonade Hotel and new restaurants. BCDA says these investments signal strong confidence and will drive jobs, businesses, and community growth. Maynilad may push through with its planned 49 billion pesos initial public offering this year to comply with its franchise requirement. That's according to its chairman, Manuel V. Pangilinan. The water firm must go public by early 2027, mandated to offer at least 30% of its capital stock to the public. Despite tariff uncertainties, Maynilad is targeting a listing by July 10th, with the offer period running from June 25 to July 2nd. The IPO will offer up to 2.4 billion shares at a maximum of 20 pesos per share and could become the country's biggest public listing. And we're only a week away from the 2025 national and local elections. The Philippine National Police on full alert status until May 15th. PNP Chief Romel Marbil says they are ready to keep the polls peaceful, fair, and orderly. He also said the police will work closely with the Commission on Elections and other agencies to protect the electoral process. All standby and quick response teams are ready with increased police visibility in polling centers. As Election Day approaches, the PNP urges the public to stay alert, report suspicious activity, and cooperate with law enforcers on the ground. Coming up after the break, Cardinals participated in the 9th and final day of the morning masses for Pope Francis. This and more headlines from around the world coming up. Stay tuned to Money Talks and One News. watching Money Talks on One News. I'm Cathy Yang. Here are the headlines from around the globe. In Australia, Prime Minister Anthony Albanese clinched a second term Saturday night after governing Labour Party expanding its parliamentary majority. As of Monday, Labour notched 87 seats, 11 more than the needed 76 for a majority. While the opposition Liberal Party won 39, 13 races are still uncalled. Though cost of living was on top of voters' minds, the anti-Trump wave has swept the land down under. Peter Dutton, the leader of the Liberals, has been compared to Trump for similarities in ideas and messaging. Dutton lost his seat in the parliament that he held since 2001. Meanwhile, over in Singapore, the governing People's Action Party retained its supermajority, winning 87 of 97 seats. The fledgling opposition, led by Workers' Party, only won 10. The PAP, led by Prime Minister Lawrence Wong, portrayed itself as a steady hand to navigate Singapore amid global trade tensions. In the Vatican, cardinals attended the final mass to mourn the late Pope Francis with just 2 days to go before the conclave. The church is in a 9-day mourning period called Novendiali. This Wednesday, cardinals below 80 years old will be entering the Sistine Chapel to take part in a secret process to elect Pope Francis' successor. Meanwhile, cardinals refused to respond to Trump's post of himself dressed as a pope. The image, generated by AI, has been rebuked for being offensive. Vatican spokesman Matteo Bruni had no comment. So has New York Archbishop Timothy Cardinal Dolan. From decades-old family biscuit recipe to handcrafted blades, Bohol has unique pasalubong offerings. And this adds more colors and stories to the province's booming tourism industry. One News Visayas correspondent Dale Israel takes us there in this report.
With a booming tourism market, a souvenir shop is as equally important when visiting destinations. In Bohol, thriving shops of old and new are still popular through the years with visitors as their usual clients. And we are not talking about the sweet calamay. What started as a family recipe of tinapay crisp in the 1940s has gone a long way, being the oldest biscuit in Bohol.
Before, it was the old ones who were able to taste it, until their children are also looking for it.
The tinapay crisps is made up of flour, lard, and pork fats. They sell around 200 plastic bags per week and earn about 20,000 pesos. They are sold in malls in Tagbilaran City. Orok said that selling these sent their children to school and has been the primary source of income of their family. From the favorite traditional tinapay crisp, variations of calamay is also slowly becoming popular. Coco Berry is selling bread filled with calamay. But not all souvenirs in Bohol are delicacy. A small house in Taloto in Tagbilaran City is offering pinuti as souvenirs for visitors who want to take home something from Bohol. The blades of Bohol have handles made of carabao horn. It costs about 1,900 pesos for the small pinuti to as much as 15,000 pesos for the lengthy pinuti or customized. Its case is also made of tindalo or rosewood, which are rare trees from the Philippines. According to Tagbilaran City Tourism Officer Dais Arsena Luspo, having unique products is essential in attracting tourists as much as the destination itself.
More tourists now, 100% now, and in fact, the tourism numbers have doubled, not just in Bohol, but here in Tagbilaran City.
Dale Israel, One News, Cebu.
That goes really well with coffee. Take some with you when you come back. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.